We did see this little push higher. Yeah. I know we settled off those highs in the final minutes of trade, but just the fact that we did close near the highs of the session, what does that tell you?
Well, there's a few things that I noted today. Number one, volumes were pretty healthy for an August Friday. When you think about it, a lot of people are already in the Hamptons on Thursday night, so we had a lot of participants. Certainly what happened on Wednesday kept people in the market. The other thing which is remarkable to me is that people for the last year or so have been a little bit afraid to go home with long positions on a Friday, never knowing what the news flow is going to be like over the weekend. They jumped in and bought with both hands today, and as Don was saying, a little bit of a seller strike that happened today. So I'm still bullish on this market, have been, will be throughout the rest of the year and probably into 2020. As I said, I think we'll see some of these political things get out of the way. So I'm very pleased with the market performance and the fact that there was good participation today for Friday in August.
Eric, how many of your clients have rung you this week and been concerned with the headlines and the volatility, and what's been your advice to them?
We definitely have gotten a sense from clients there's some concern on trade, on politics, and corporate profits as a general statement. But I'd say this has been still a very measured downward move. We are constructive on markets. We think that there is some upside. We'd probably be buyers on more of a scaled basis. There's likely some more chop. We certainly need to have more clarity from the Fed. We're going to enter a pretty dead period for earnings. About 95% of the S&P has already reported. So there'll be a little bit of an air pocket of information flowing. So I'd say that clients in general are, certainly paying attention to markets, but not as concerned. And we think that's appropriate. We think this is still a market with some opportunities left in it.
Michael, your take on this market right now?
Yeah, I think that what you saw with the 800-point drop is really just a very emotional overreaction. I think it really was mostly undone over the last couple days simply because there's going to be, in my view, a deal that's going to happen. You look at all the sectors were pretty much up today. You had huge bounce backs. In fact, interestingly enough, here's a stock, Apple, that people are concerned is going to be so impacted by China. And how did Apple end up doing this week? So I think there's a lot of overreaction at this point. I think there's also a lot of people waiting for this sort of downturn to buy. That's why I think you saw upward selling pressure today.
Keith, what if a deal doesn't happen? What happens to the market then?
I think you see the yield curve start to get impacted a little bit again, and therefore the market will sell off. It will react to that news. That is probably the biggest risk in the market right now. We've all gotten comfortable that earnings will not be great for the remainder of the year. We'll always have political backbiting going on in this country and perhaps around the globe. So it really does come down to trade and tariffs for me in watching this market.